Morning, I'm Steve Walker, Client Portfolio Manager on Npower's Optimisation Desk on the 12th of December 2014. Markets have dipped again this morning, with key drivers being an oversupplied prompt gas market, warm temperature forecasts on the near side despite a cooler start to January, and continued good renewable production. Please keep watching for more information or contact us at the displayed email address. Longer range temperature forecasts overnight are suggesting colder temperatures towards the back end of the forecast, indicating demand increases of 10 to 20 MCM per day the first week of January. Despite that, next week, December, has been revised warmer. For the time being, this is helping pressure prompt markets. So January is down around 1/4 pence per therm on the gas. In Q1 has traded early, down 15 pence against last night's close. Starting with nearside gas, predicted closing line pack is slightly long this morning. The Dragon LNG facility continues sending out 13 MCM. Could be indicative of a cargo scheduled in the coming weeks for maintenance purposes, or simply a bearish view of the forward market. News back in November did suggest that berths at Dragon were being sought as an option in light of depressed Asian LNG markets. We'll be monitoring nominations and cargoes in the coming couple of weeks. Storage withdrawals are healthy today, with rough above 30 MCM and MRS flowing around 12 MCM. MRS is a likely candidate to reduce withdrawals to help balance the system, although flows across BBL have exhibited some within-day volatility this week, alongside some of the larger currency moves that we've seen. Power wind feed-in is set to peak at 5 gigawatts today, with medium range forecasts still suggesting really good levels of feed-in there, above 7 gigawatts next week. CCGT demand has increased on the day, 6 MCM higher, as a result of the decline in wind production. The French interconnector continues to be curtailed by around 200 megawatts, although we've seen no remit announcements, so we'll keep an eye on that. Spark spreads are mostly unchanged at around the £2.50 a megawatt hour level for January. Be interesting to see whether or not those widen based on the early indications of a cold snap at the start of the month. Again, we suggested that this level looks well supported and is the price prior to the announcement of the station outages back in October time. Oil extended losses below $64 a barrel, as OPEC members look set to continue their battle against the US shale producers. Production in the US expanded to just over 9 million barrels a day through December the 5th, according to the EIA. Global demand for OPEC's crude will shrink by 300,000 barrels a day to just below 29 million barrels a day next year, according to the cartel. Iran's oil ministry speculated that crude may fall to $40 a barrel in the prompt few months. So again, further bearishness compounding crude's losses. That's it for today. Have a good weekend.